Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Thursday, September the 17th, the year's 2020. Let's talk trading. Questions and answers. Buy zone. I got some buy zone questions yesterday, so I'm going to try and answer them today. But first, just to let you know, these videos are for educational purposes only. Your results may differ from mine. Okay, the buy zone. Why do I recommend the buy zone as one of the methods to trade? Well, one reason is because it's simple. And the second reason is, and really it's probably the most important reason, is it's statistically sound. So I'm going to bring up the sweet spots, the simple chart here. It doesn't have the buy zone on it, but I'm going to walk you through a few things so you can understand why um, the buy zone trade and the sweet spot trades work. So I've got an indicator up here that I wrote. It's the TRO 2020 frequency distribution hour, day, range occurs. So right now, this is looking at all the days, and we're looking over the past 985 bars here. And what we're testing is high minus low, or the range, greater than 13 pips. So right now, this is the hour we're on, the 1600 hour bar time. And you can see above 13, 42 times out of the and 0 below it. So for this hour, the range is going to be 13 almost every time. Now, there could be a day when it's not, but based on statistics, it's probably going to be above 13. And actually, for some reason, oh, I know what I think I can do. Let me look at the B clock indicator. You could put the, I thought previous high, low, ADR, no. I thought I had the range in there, but I don't. But right now, the low was 74 and the high was 09. So that's about what? 09, 26 plus 9. It's definitely over 13 pips, 39 pip range. So you could see it here. You got 10, 20, 30 pips. Now, but that's the range. The buy zone, what we're looking at would be high minus open or open minus low, because we're trading away from the open. So what you can do is you go into the indicator and the value option. Let's do high minus the open. And let's just make it, let's say we want it to be 5 pips. And that's that's what we usually use on, say, the hour or the H4, which was one of the questions somebody had asked me. So if we switch it to high minus open 5, you can see here 78% of the time it was 5 or more, and only 9 or 21% of the time it was less. So you like those odds? 7, almost 8 out of 10 times you're going to win. You're going to get 5 or more pips. Now let's reverse that and let's look at open minus low. So open minus low, once again, it's about 78% of the time. It's going to be greater than 5. But you say, but if that's the trigger, maybe, just maybe, I'm going to have more losers because you're just looking at 5. Okay, so what we do, let's bump it up to 7. So you see there's 69% at a time. Now remember, the other one was 78. So if you took 78, let's see, I forget what the number was. I think it was about 32. If you took 32 trades and you won 29 of them and you made 2 pips, and say you lost, what, 2 or 3, and you lost, what, say, what, 4 or 5 pips, would you be ahead? Think about it. So that's open minus low. So now let's look at the high minus the open again. So here was 31. And was it at 32 before? So if you took 32 trades and won 31, and you made 2 pips. So what am I doing here? You want to find what I call the sweet spot. And that is, first you say, when will this number almost always be 100? So let's go and look at, we started at 5, and I don't think, was that 100? Let's take a look again. Let's drop it down to 4 and see what happens. Okay, so at 4, we're at the 80% level. What happens if we drop it down to 3? 3, we're at the 88% level. And 3 is about the spread times 2, because my spread's usually somewhere between 1.1 and 1.5. Now, if you drop it below 3, what's going to happen is you look at these wicks, and you can see sometimes they could definitely go against you. But right now we're looking at 3. 37 times it's going to be 3 or more. So that would put you in 37 trades. And then if we go back up here, and let's just try and get 3 pips. So 6.0. So remember this number, 37. Now it's 32. So you win 32 times, you lose 5 times. So if you were to take a 5 pip loss 3 times, was it? It's early. We can go back and look. Maybe I'll write these down. So if we were to win, we get 6 pips 32 times. Or we get to 6 pips 32 times. And what was the 3 again? 3 was 37. So we're going to have 5 losing trades. Call it 5 pips. That's 15 pips. So losers, we're going to lose 15. But we're going to win 32 times 3. So 32 times 3. I believe is 96. You're going to win 96 pips. And if you subtract the 15 you lost, that's 81 pips. So that's how you analyze a buy zone trade. That's how you get those wins. And sometimes you might get more than the 3 pips. So as you can see, this is how you put the statistics in your favor. And, a lot of people are saying, well, yeah, but look at your R, your risk reward, and all of that stuff. I go, well, that's a totally different style of trading. Totally different. And you can see right here, had you taken that trigger, of course, that's a hairy hindsight, right? But it's not really, because we set these trades up before they happen. Been talking about these things for years. I mean, if you go back and you go out to the internet, you Google, and you can probably Google TheRumpledOne, and you can find charts that look just like this. No, this indicator I just wrote this year, but I had written other ones to know these statistics. But you'll see the chart just like this, and I say, all you need to trade is a horizontal line. Same chart, nothing's changed. I mean, we're talking over a decade ago, almost 2. And it still works. Why? Because price ranges. And as you saw, if we look at the range, it's going to be really hard for these candles to stay between 2 lines. I mean, yeah, it happens usually early in the day, maybe the first or second hour of the day. But after that, it's going to hit that line, and usually it's going to cross it. It's going to cross one side or the other or both. So in this particular case, it crossed one side. In this particular case, it crossed both sides. Actually, no, it didn't, because it opened here. But we had an open here. It crossed that line, and it crossed that line. This was a news trade. That's when the news came out. And there was actually news this hour, too. So, fellow traders, it really is that simple. And so once you play with these statistics enough and you look at the charts and it hits you like a ton of bricks, you have that aha moment, then all you have to do is, when you see price hit the line, you enter the trade. You know what the statistics are, and you enter the trade, and you either have your stop loss hit or you take profit. That's it. And as I mentioned to one trader, you don't even need confidence. You don't have to think like that. There's no second guessing. There's no first guessing. You just take the trade and you keep doing it over and over and over again, because the statistics are in your favor. That's it. I mean, and what's really interesting here is when you look at some of these maxes, when it crosses, it's huge. I mean, there's some that didn't cross, but it's huge. Actually, the minimum pips. These are the ones, let's see, above, below. So yeah, there were some that didn't cross, so these didn't trigger. So, that's the other thing you look at here. Because if this number is not greater than 3, it didn't trigger. So, fellow traders, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new, welcome aboard. Please click subscribe, click like on the video. This is TheRumpledOne, over and out.